What is going on? Happy Friday. Welcome on into today's live stream as the desk adjusts. Okay, we got an interesting little day here. The past couple of days have been pretty interesting, to say the least. So we'll talk about some of that stuff. We're looking at Bitcoin. That's the chart that I got pulled up right now. I was just looking at it. It looks like a false breakout, but also Bitcoin does this shit all the time. So are we surprised? Not really. So check out the weekly on Bitcoin. So it's like got this resistance right here at like this 31,000 area. The only thing that I would say about it is that like it's got the stair step pattern on it, essentially, like these higher lows, trending up. But in the past, it's taken more than just like a couple of weeks to kind of break the consolidation and have the next leg. So we really only have like 3 or 4, or really 3 weeks of consolidation here. So wouldn't even be surprised if it pulls back a bit more, into like the upper 20s, something like that. But we'll see. That's to look at Bitcoin. Outside of that, gold's flat. Silver is up again, 0.79%. Look at silver's weekly candle. Oh my gosh. Oh my gosh. Here's the daily on it. 3 green massive days in a row. 2 green big days in a row. Today's another day. It's almost 1%, pretty big as it is. But interesting day. It was a red day for me. I'll talk about that in a second. So we're going to see if the market momentum is going to continue. That's the biggest question everyone's got. It's funny how it goes. Like everyone gets really pumped up. I think yesterday was a really big day of like, holy shit, we had some big moves, small caps, mid caps, large caps, everything was going crazy. And then today it's like, oops. And then everything's down 5%, right? Or not everything, but look at small caps above me, look it up. They're all red. All my my risk on watch list. ARK's down 2.5%, Affirm's down 6.5%, Coin's down 5%, Snap's down 3%, Lucid's down 6%. This has been getting crushed. AI's down 5%. Like all these stocks are getting hit. Unity's down 5%, Roblox down 4%. So it's funny how it goes. Like everyone gets a little excited, and then oh shit, didn't see it coming, and get slapped in the face. But that's how it jets. Generally speaking, stock market psychology for you in a nutshell, right? You don't want to be the one that's buying in when everyone's going crazy, right? So here we are. We're going to talk about a bunch of stuff, and we'll look around for where weakness is. I got a couple things that I want to pull up that have been relatively weak that we'll see if they want to continue to be weak. If maybe the market pulls back, which it looks like as we speak. The S&P has gone red. The Qs have gone red. IWM has gone or is red. It's been red all day. The Dow's actually up, believe it or not, 0.3%. Funny enough. What's going on, Flippa? Russell short right now. Let's take a look. I was actually going to peek because let's pull it up. Hey, that doesn't look too bad. I mean, let's see what happens into the close here, but you might get, the market's kind of pulling back. I wouldn't be surprised. These types of days after some big moves, the Friday, obviously anything can happen, as we all know, but if we're not squeezing out, many times you can get some pretty good sells, especially if people start going, oh, everything's kind of down. Well, I had a good week. Maybe I don't want to get caught in a pullback. Boom, big sells into the close. I wouldn't be surprised. So I like that look. I mean, I would say, maybe an invalidation would be above here. Not really above VWAP again, but something like that would be an invalidation of this trade if it gets back above here. Maybe. Just from my 2 seconds of looking at it. But yeah, SPY was up. I mean, the thing is, SPY hasn't been like insane. Like the past couple of days, it hasn't really moved a ton, like percentage wise, really. And the big moves already kind of happened. High of the day was 451.36. Now it's at 448.82. I mean, like this thing is like, especially because now that SPY is up around 450, a $2 move, $3 move isn't that big percentage wise. Now a $5 move, okay, that's a decent, it's a decent move now, like realistically. So I don't know. That's just kind of how things kind of play out as you get higher, and especially the prices. And you look at Nvidia now, and like Nvidia, which is a crazy move, by the way. Nvidia was up huge. It was up like 2+%. It's at 480. Now it's at 453. Like, oh my gosh. But, for a stock as volatile as Nvidia, it's not that insane. However, that's a $30 move. Like, talk about a monstrous move, right? So as the stock prices get higher and higher, you kind of start to, for percentage-wise moves, like you need a bigger move in the actual dollar of stock. This would have been a good short trade here, although technically it would have been risky because you've been shorting it right into the highs of yesterday, which potentially could be support, and it was, and eventually it broke. Even a little one right there on Nvidia. way more weak on the Russell. Also on the Russell too. I mean, it got into the gap, I think, right? Did it fill it or it got close? Mostly it got into this gap and then it started to fill to the downside. I didn't completely fill it down to like 190 would be the clean gap fill on the Russell. But yeah, it was weak today off the beginning. And I was even looking at the Russell. I was like, I kind of think that this hasn't really pushed. I mean, yeah, obviously hasn't pushed like the S&P and the NASDAQ the past couple of weeks. But in general, the past, like, as of late, it kind of broke out of this area of resistance right here around this like 189, 190 and like didn't get a great push off of that. So maybe there's more coming on from a swing perspective eventually if it can, back test the 189, 190 and hold that and then kind of bounce higher. We'll see. I'm excited to test out. I'm going to have a new swing trading strategy really kind of going after the risk on stocks. If momentum continues, like we have to have certain criteria met. It's like it's building off of my strategy for day trades only that I'm now kind of backing into maybe swings. So I'm going to test it out with the IRA, going to just a few bucks here and there to see if I can, and then track some of the data. I'm really excited to get the data from it to see, I'm targeting like a 40% win rate on that because I don't need it to be an insanely high win rate, but I think a 40% win rate with what I'm looking at because I'm going to play options on it. The potential for the options could be a couple 100%. And then, your downside could be go to zero. Sure. Ideally you sell it before that, but I'm going to mess around. Palantir was my first target, although it didn't break out. So maybe next week, maybe after earnings, I'm thinking, to be honest, my perspective, I'm only going to be here for another week. Next week I'll be around. And then after that, I'm going to be away for a week. And then it's pretty much August. So as crazy as that sounds, and a lot of the earnings come like next week, Tesla, Netflix have earnings. I'm sure there's other ones out there too. But then the week after that, it's like the big caps got earnings. And then after that, you start seeing some like smaller, mid caps have earnings into early August. So I think like as we get into early August, like we'll have the dust will maybe be settling from, earnings season or starting to settle from earnings season, at least the big movers. And then you'll have the Fed, the rate hike will be out of the way. Not that's, I honestly don't know if there's gonna be much of a reaction off the Fed rate hike at all, because it's like so baked in that we're going to get a 25 hike from the Fed on the 26th, I believe, of July. It's like 12 days away or something like that now. Yeah, 12 days away. Yeah, 96% chance of a 25 hike. So I think it's like it's baked in, like, without a doubt, that's going to go down. And this, like, the Fed doesn't want to come out. And the last thing the Fed wants to do is I feel like at this point in time is pause again when everyone's expecting a hike, unless they have some really crazy reason to pause, which I don't think there's really no signs pointing to that at all from all the Fed governors that have been speaking and stuff. And that maybe even sends the market higher. I don't know. They probably don't want the market to go higher, if we're going to be honest. So, yeah, that's where we're kind of at. Overall, though, outside of the market or the S&P and the Dow and the Nas, we got package coming. We got the 10-year. So here's my thought on the 10-year. So this is interesting. So this is the 10-year yield. I got a bunch of lines just marking out like key levels, if you will. So here's our consolidation breakout, was around this like 3.86 area that also lined up with this downtrend like that we had dating back to October. It broke out of that downtrend, popped up, hit literally to the cent or to the percent, if you want to call it that, the highs that we saw back in March before we had the banking mini scare, I guess, if you want, maybe it's a bigger scare, I don't know, the banking scare. And so he came to that exact spot and then boom. It could easily back test. Like, I don't want to get too caught up. So I'm giving it like this entire area as a back test, as like a valid back test where like, and then it can make it higher low and go higher. But I think I have an alert. Do I have an alert? I don't have an alert. Let me make sure I have an alert. I have an alert on this, or I'm going to add an alert on this crossing down. If we break down below this consolidation low, right, of around 3.7 on the 10-year, I mean, I think that would, in my book, confirm false breakout. And then I think we're headed down towards the bottom of this range over the coming months, weeks, months, I don't know, whatever. That's based off the chart. Like, that would not, like, if I was in a breakout trade and I'm in this thing and I'm like, oh, here we go, long, and I play the breakout, I'm feeling good. If I didn't take profits there, which maybe I was looking for a bigger move, I didn't take profits for whatever reason, and it backtests, okay, we're fine. But if we break down below this consolidation, that's like always my stop loss. Like something like that is always my stop loss. Worst case, sometimes even higher up, but that's like last ditch stop. Obviously, again, anything can happen, but from a technical view, that would not look good if I was looking to be long. So that would be like my, thoughts on it. Still has some time. It can still consolidate in here, and not surprised it's up today. It had a big, past couple of days of downside. But that's what I'll be watching for on that. So I have the alert set. So we'll be watching closely. But like, I think a bigger story this week was the dollar. I mean, look at the freaking dollar. Just absolutely got obliterated from 103, boom, all the way down to sub 100 on DXY. That is a move. That is a freaking move. I would expect some sort of back testing, maybe back up into here. I don't know. But doesn't look good there on the dollar, if you ask me, at all. So weak on the dollar. The 10-year, it's kind of got to hold this general area. If it doesn't, that's not a great look. That's probably going to be heading lower on the 10-year yield. And why that's, I think, is important is if you want to start to piece this together and make sense of it, because you can, when you're talking about stuff like this, like this starts to break down. This starts to, I don't want to say scream recession, but it starts to get, sound some alarms, right? I would think in terms of screaming a recession would be if you break the bottom bound of this consolidation or this channel. If you broke this, then it's like sub 3%. I'm like, okay, then yeah. Oh yeah, that's not a, that's telling us something, So we'll see. I sold the rest of my Meta swing trade yesterday. Didn't quite hit my ultimate target of 320, but I just wanted to get out of it to clear up some margin that I was on for it. And I got close. I mean, it got to like, what did it get to the highs? It got to 316. I mean, my targets were 3, 310, 320. It got pretty much almost all three of them. Maybe it still can go. But at this point, just wanted to lock it in for the week and just call it a week here on that. The Robinhood did decent, or I think it's at a high of the year. The Robinhood account is at this week. Surprisingly, not really off the back of stocks because I'm not really heavily in, like my biggest stock position is Jeppy, which is up, don't get me wrong, this week. But, that's actually doing pretty well, by the way. Compared to the S&P, it's actually got some pretty good strength, which is up, but not a lot. Like this thing is not moving 20%, you know what I mean? It's moving a percent or two, not even, like that's it. So it looks good. It's breaking out of this consolidation, breaking out of the wedge. I like the looks there. But again, this is a dividend ETF. I don't really necessarily care about, what its price action really is. I'm not like, oh, look at this, it's going to go to 60. Who cares? It's just give me a dividend. That's all I care about. I added a hedge though today, and I put it in the Discord earlier. I was like, is it time to go with SQQQ? And Think I'll come back to the chat in a second here, but so far the timing is good, but I mean, who knows? I mean, you never know. I think I got, let me see what my average is. It's actually hilarious because I might have gotten very, very close to the bottom looking back now that I'm like in it. Here we go. Pull it up. It's now went green on the day. I had an average at 718. When the low of the day hit? 706. That's pretty darn close. That's actually pretty impressive. Got pretty close to the low of the day on SQs. But I got 100 shares of this. I don't really feel the need to play options. I don't want to do that. If you know me, I like nowadays, like I'm very much inclined to play a 3x ETF shares versus options on a stock or whatever. It adds to the whole. It adds a factor that just doesn't need to be added in terms of risk or just in terms of ability to lose. So hedging with this, I mean, the intention is like if I technically want to sell it now, I could sell it now and have made 40 extra bucks that I wouldn't have had that I could go use if the market were to roll over and I don't want to say crash, but roll over and pull back a lot, that I can then go buy Jeppy with one day and buy an extra share of Jeppy. I could, that's the whole point of the hedge. Although I'm going to be away on a trip, so peace of mind, you know what I mean, is kind of my view. It's everyone's different, but also lines up with a pretty good time because fear and greed's extreme greed. The AAII, by the way, sentiment survey came out yesterday, and it wasn't as bullish as I thought. It's actually came in less bullish than the past couple of weeks. About the same bearish, but more neutral. People are like, I don't know what the fuck's going on. That's kind of what happened. So just a general update. But yeah, I have this, and I also have SRS, which is the 2X short real estate, which is down, I mean, as of late, because the market's been going up. But my bigger picture view on SRS is this. I mean, we've got some nice higher lows overall, like big picture. Yeah, did I buy it like somewhere up in here? Yeah, but I don't really care about that. I could actually buy more if I wanted to. But I'm essentially hedging the portfolio with SRS and SQs right now, and then the rest are in what they're in. So that is the deal. Fed getting their soft landing, at least it's looking like it. Now, I think so. I mean, that's what it, as of right now. To extend, and then again, we have been saying things have been extended for a while, and they can keep going. That's what's funny about it all, I think. But here's the thought, though, on the whole soft landing idea, just because that is now the approach, right? That's the thought. Let's make sure, like in the back of our minds, I think we should be thinking to ourselves, like, okay, great. Momentum's nice and strong. Market's getting kind of hot again. People feeling good. People happy and all, whatever. Just make sure we're aware of the backside of like, well, what if the Fed over tightens? What if we actually don't get a soft landing? Because again, I mean, who knows? So this is, again, all this stuff is fluid, right? It's always changing. What if that doesn't happen? Are we prepared in the backside? Who knows what that necessarily means? Does that mean the market's going to crash? I don't necessarily think that it has to. But I think a good way to hedge for that is, with bonds and whatnot, and not have to be overly aggressive, right? If you captured this move or some of this move, great. No need to be overly aggressive. There's better deals outside of large cap tech. And maybe that's a spot to be looking. Biotechs, maybe the Russell is a little more interesting, some growth ETFs. Just people a little concerned there. But overall, that stuff will do better in a lower rate environment. Do we end up seeing that? I don't know. How much is the Fed going to have to cut at some point in the coming years? That's the ultimate question, right? Did they do too much? So let me see if I can pull up Trueflation's site and see what they got right now. Trueflation said, holy shit. It's actually hilarious to look at these things. So this, by the way, these numbers are coming in. This is a new low. Yesterday it was at 2.5. It's at 2.11. This is a new low on the year or this cycle, on the backside of the inflation cycle, on Trueflation, which is essentially a way or a site company, if you will, that is trying to take CPI and make it more real. Like take the CPI that we see from the government that they now say is at 3% and give us like what it actually is. Cause that CPI, there's a lot of flaws and there's a lag. So you ever hear the leads and lags, you watch CNBC or we've talked about before, leads and lags, yada, yada. They're trying to get rid of some of the lags and to make a more accurate depiction of what the current inflation rate actually is right now, not what we're going to get on this next CPI or what we got on this past CPI, I guess this week for last month. That's, kind of delayed and whatnot. So this has been really good to watch and look at. This just came in at a 2.11, which is the new low on the year, which, by the way, if this is accurate and the CPI has been trending towards, the Trueflation's actually been pretty good. And CPI tends to catch up to Trueflation, fairly shortly after. This is true. We're on track to hit that target very, very soon, maybe by the end of this year, when the Fed was saying their expectations were that was not going to happen, that we were not going to get 2% by the end of this year. And if we do, is that looking at, we could say, great job, Fed doing good job, right? That's great. But the thing is, well, what happens if like those lags are legit, right, from the hikes? And all of a sudden it's like, well, now it's like, CPI is 2. Now it's 1. Now it's 0. Now it's negative. Is that a bigger risk? Is that a bigger concern, right? Of what happens into like next year? That's what I gotta start thinking. So also think about this and look around. I don't know about what you guys see. Everyone has their own experiences and stuff. You can go and point out a ton of examples of, oh, demand is so strong. Oh, everyone is fine. The consumer is fine. But then you could also go and find the opposite and point out the situations where, oh, here's why the consumer is actually not super strong. Look at credit card debt. People are tight. People are not spending as much money. This is not good. Like there's a lot of, you can handpick both, right? Which again, puts you on this middle, like we don't know like what's going to happen, but it's like, again, like, you have a lot of arguments that can go both ways. So it's going to be super interesting to see how this plays out. Either way, I think I'm going to have a video like the week that I'm away that's going to be kind of going over my thought process on like my whole like Robinhood portfolio and like what the plan is, because it's done well this year. It's up like 45%, something like that, 44% on the year, which is like, obviously the market's done this, like, yeah, it's going to do well. Fair enough. But now my game plan is defensive. It's defensive, right? If you got a good piece of this, could it keep going? Oh yeah. And guess what? I have equity position, like, I got position in Jeppy that will cover me there, right? But now it's more of like, let's not be over leveraged. Let's not get too aggressive when everyone's feeling good, and start to be defensive, but also collect a dividend, collect a check, sell covered calls, capitalize on selling covered calls while, stuff is expensive and people are buying calls, right? And then you're kind of covering your backside so that if, let's say, the market pulls back, I don't go from having a 45%, gain on the portfolio and the market pulls back the second half of this year or into next year. Now, all of a sudden that's down to 10, or less, which has been me in the past. So my game plan is to keep that number and to kind of preserve that number through dividends, through selling covered calls, and also deleveraging out of the riskier stuff, right? When everything is good and everyone's feeling good. When everyone's shitting their pants, then we can start saying, okay, let's feed me Soxel at $10 again or whatever, right? Remember when this thing was at 10? The semiconductor 3X ETF. Remember, I was actually in the sixes. I was chomping around down here, and I didn't know what was going to happen, but I was chomping around. I was buying, and then now look at where it's at. So again, I think it just on a piece of the portfolio. If you want to play that macro game, you want to play that like swing investment, swing trade game. Put the piece, not everything, a piece. You want people to be crapping themselves a bit, and that's when you say, okay, I'll start nibbling, I'll start taking a couple nibbles here. Looks like semiconductors correction started. I mean, the thing is that they are up a lot, and this is the consult here. I'm gonna go to SMH just because SMH is a better view, but I don't think it's a bad play, especially for a hedge. There's a bunch of gaps to fill back to the downside here on semis. You can come back down, fill down to like 154. 152. Those are some good targets to have in mind. Only thing that I would say, right, again though, with that is like we have still higher lows. We break down below this, and then we can start saying a bigger pullback is in the cards. There's just no way to know. There is no way to know if this is going to be, a little pullback, consolidation before a bigger move up, because again, that's what the markets, we were trending up. There's no reason to say, okay, trend's over, right? Or right, so that's my only concern. And if it's a hedge, fine. If it's a little trade, fine. Maybe the stop loss is over the highs here today, fine. It also just tested and broke an all-time high, by the way, on the semiconductor sector, or semiconductor ETF, SMH, broke a new all-time high, and then it pulled back. Kind of what you saw on a lot of stuff. Nvidia today hit a new freaking high and then fell $30+ to the downside. So that's the look. And I sold 10 more shares of Soxel today. My next target was like $30. We didn't get it. I only had like 30 shares left of it. I sold 10 more just because I'm like, hey, Nvidia, AMD blew up this past like day or two. Let me just lock in some, and now I got even less risk. If it's going to eventually build a higher low and go higher, fine, right? But for now, I'm just going to lock this in and not have to worry about it even a tiny bit. Like not even an ounce. We're recovered. I mean, that's the thing. Was funny. I was looking at Qs and SPY. Yesterday I think I was looking at them, and I'm like, let's look at this move to highs. Like from today's high, QQQ is like less than 7% from all-time highs, which is nuts. SPY from today's high is like 6.2. They're both very similar. Look how fast. I mean, that's what's crazy about it, is they recovered fast. They really did. Kyle's in the house. A lot of mixed signals. I think that's the thing. And again, like, so in that scenario, like, does it really, like, does it matter? Like, you know what I mean? Like, I even thought about this. I'm like, if I had an investment opportunity, or if I had an opportunity, or if I had a need for the Robinhood, and I needed to pull 5K out for something, or it was an emergency, I'm like, I honestly wouldn't be that pissed about doing it, because it's not like I'm pulling it out and the market's at lows and the market's crapping itself. We had a good run. Could it keep going? Yeah. But we've had a good run, and like, I'm not going to try to be trying to, do too much. And if it makes more sense from a return perspective, like if you know what I mean? Like if you had to pay off debts or whatever, and you're like, I got a fat, interest rate over here, I can be paying off this debt or just pay it off with cash that I've made from gains, and now the market's at highs. I don't really have an edge at all. I don't really need to do anything. Then okay. So like for me, I think the biggest takeaway for me now, is when we feel like that, when there's no edge, when you've done is starting to understand like that feeling, and then becoming more defensive in that. In the past, would do stupid things, but just buy options and buy short-term puts or whatever to be like defensive. But also that's being risky as fuck. Like I'm buying short-term puts. Well, yeah, the market could go down, but if it just consolidates for a week, then those puts go to zero and then it goes down. Now I'm pissed. Like I'm getting double screwed. So it's I think a lot more defensive, and doesn't need to be like go all into the short side or all in hedge. It just can mean like take some from longs and put them into a dividend ETF or whatever that isn't going to be very volatile. So if we do see downside, it won't be down 20%, and then we'll pay you a dividend, right, in the process. JPST and chill. Yeah, that's exactly the idea. I'm thinking honestly though, if there was a place to be, I'd say it's TLTW and chill right now. Is my semi add a little bit of risk to that, but also not really, because it's a fat dividend and it pays monthly. And also, I mean, look at the bond market. Maybe just had a false breakout. I think the confirmation of a false breakout is this break below this 3.7 on the 10-year. But I mean, that does not look great, that pop and drop at all. So I don't know. RDW small cap. Some good strength on it down. Oh yeah. That's nice. I was looking at, I got a bunch of different looks on some of the risk on stocks. The only thing that I was kind of like doing some back testing, if you will, or mental back testing, not really tracking numbers crazy, but I was like looking, the better risk rewards though on a lot of these are not necessarily after like this. The higher probabilities are like now if for example, this thing like this right here was better, because you had just had a big move up, it consolidates, and now you have the next move up. Now, right, it trends down for a while, for a bunch of months, gets this big move up. Ideally, it consolidates or whatever it does, right? Consolidates, and then that's like when you start looking for the next break, then the next move up is what you want to look for. That would be a much better risk reward. You want to look for like some sort of move up prior to the next leg is what I have been finding tends to be the best momentum-based state to be in. So like, for example, like you can go through like the risk on list. Let's go through. Might as well rip through this list. Like if we look at ARK, right, we're in extension mode, nothing to deal with here. We want to wait for consolidation or pullback or something. Like for example, ARK after this move up here kind of had this almost consolidation, then it had this next big leg, right? Okay, cool. So kind of, not perfect. Affirm, I don't know, that chart's a mess. It's all over the place. Coinbase, huge move up. Like Coinbase, do something like this, then break that high. I mean, that would be amazing. That would be a beautiful like upside, continuation trade. Like so Coinbase is like a no. I mean, it's just straight up. You want to take a shot here? Go be my guest. Like, I don't know. Who knows? There's no edge there in my opinion. SQ, same thing, big move up, but prior to this had a nice little bit of a consolidation prior to that. But still, a lot of these stocks still, Down towards lows, like you got to start breaking to the upside and see if we can get something. Snapchat, okay, here we go. Snapchat had some nice moves. If Snapchat can start to consolidate, maybe that's a candidate for the next play to the upside or momentum, right? Snowflake, I added this one to the list of risk on. It's kind of there. It's kind of got this consolidation now, but it's kind of wonky, a lot of choppiness. So not a huge fan, but over $200, open waters, right? Upstart, big move, not really interested. Shopify, kind of just in the process of breaking out now, but yeah, you could say that. Yeah, I'd say that. Yeah, Shopify, as long as it holds over 65, I think it looks good. Maybe even technically you could say stop loss at 60, take profits, well up into the 80s maybe, which would be the gap fill right here, 83. So that could be an idea. Could be a valid trade. Risking like $8 to make, I don't know, what is that? Risking 8 to make 15, something like that. It's pretty good. Rivian had a big move. Yeah, so Rivian, for example, right? Big move. Now let it consolidate. If it consolidates here and then it breaks back up over this 27, okay, cool. Then that's your, the next play. Palantir, I'm actually eyeing up. I would like to play it. They have earnings out in August, though. But if Palantir in the next couple of days, next week or something like that, were to break over this 17 area, 17, 15 or something like that, I was considering maybe even a swing position there. And then the stop loss would probably be like $16, maybe even $16.25, something like this. Like this would be the stop loss. If it breaks out, enter here. Stop loss, if it were to do a falsie, stop loss, don't get stuck in it. Stop loss would be here. And then target maybe $20, 20 plus would be target. I think it's a very doable trade on Palantir, which is funny. It's, well, not funny. It's been a beast as of late, but it's kind of in this like quiet period. I had a big run back in like early June, May, June, and then it kind of, it's been in this 14 to 17 range for the past couple of weeks. And it's kind of gotten quiet again. But now, that's good. Wait for it to kind of quiet out, let the premiums decay, and then, boom. Roblox, choppy. Unity is a good one too. Unity, I would love for Unity software to consolidate, somewhere up in here and then set up for the next leg. That would be awesome. Look at this chart. I mean, talk about some range, man. Volume profile wise, like there's no volume until the 80s. Like that would be awesome up in there. So Unity is a good one. I think Unity, if it holds this 40 area, the low 40s, it could be the risk reward could be like really good. Really, really good on the trade now to the upside. But I think on those, it's like, you're just waiting for that to show you strength, consolidate, show it still strong, and then, okay, great. And that's your candidate for upside. Lucid's been getting killed. DraftKings has been a beast. Kathy Wood, I guess, is liking that. That's why she's doing well as of late, because she's got DraftKings. It's a pretty big portfolio position, I think. BYND, AI would be good if it consolidated for a while, but it's kind of wonky. Roku. Yeah, Roku had a big week this past week. Yeah, Roku would be good too. Roku could be another candidate, if it consolidated for a while for the next leg up. Yeah, could be a candidate because it's had some nice moves off the lows. So yeah, that's just, going through the risk on list that I like to follow. There's a lot of more stocks out there, don't get me wrong, but that's just the list that I've got. And there's some promising stuff on there. That's for sure. Friday nerves. I think that's the thing. When you get to a Friday, there's like really like two solid scenarios that tend to be at what happens after a pretty strong week. You get the Friday squeeze out, which is just like it rips, and it just even squeezes harder into the end of the day. Or you get kind of this like Friday sell off, and it's like, well, we had a good move, and it's not really worth my while to be holding over the weekend right now. I don't know, and then just sell. Like that's kind of what we're seeing, it looks like. Kinda. Futures, short MES, something, stop. Yeah. I mean, that's the thing about hedge funds. Like they'll literally use futures for hedging purposes. People will trade them for like speculation, but hedging purposes is literally what hedge funds like. That's like their name, literally. BITO is better for risk on and OARK, yeah. Like I really like. Let's look at OARK. How is that done? While ARK has gone nuts this past like week. Yeah, so like it hasn't done as well. Like if you were to compare the charts, right? But you also just got paid in July a 55-cent dividend. and then August, I'm sure it'll pay attention. So there's like a weird blend of like, you want it to do well, but you don't want it to do too well almost on some of these, but it doesn't really matter. You're still going to capture the yields and the dividends anyway. But yeah, I would prefer like on pullbacks if I wanted to, / if I had extra funds, something like OARK will be maybe a decent addition to the portfolio just to get that dividend, man. Juicy dividend. It says 40% as of now, which is nuts. But I mean, hey, 55-cent dividend on a stock that's, under $17. Do the math, right? You get 100 shares, that's $55 a month, or at least this past month. The month prior to that, dividend paid 51 cents. Then it paid 36 cents prior to that. The month before that, 51 cents. And prior to that, 76 cents. Okay, so there are some decent, juicy dividends in there. So. Crypto's been funny. They've been getting some decent news. What was it? XRP had some news this past couple of days or yesterday or whatever, then ripped 100% or something like that. Bitcoin down 4%. The Bitcoin chart is funny to me because like I'm not surprised at all. Just look at these upper wicks. I don't know, man. To me, it kind of screams manipulation or screams just some shit. If you're trying to trade it, good luck. Talk about a vehicle to be faked out the like you. Bitcoin will fake you out 1,000,000 times. So I prefer to not trade it and just leave it alone and let it do its thing. And then just if you want exposure to it, get exposure to it, buy Bitcoin or just friggin' buy, Bitcoin ETFs or whatever, and get the exposure. You know what I mean? Whatever. You as a mover looking attractive. Yeah. Yeah, no, Unity is an interesting one and looks good. It's got some good momentum. Plus with the whole like AI stuff, I mean, and they partnership with Apple. I mean, that's a stock that's had some positive news flow. Again, does that mean anything? Not necessarily, but it's had some positive news flow. Could be an attractive look as something to get into if you're looking at maybe like a risk-on stock or something like that. Kathy's definitely been on Roku this entire time. Yeah, she has. She totally has. But I mean, if you look at Roku though, too, like talk about a freaking destructive thing got destroyed, but like I'm not saying like it has to come back to highs. Like look at what Nvidia did. Nvidia did this and then it's now way up at highs, right? Like if you were to maybe like if Roku has like something like this in the tank over the next like even next like 2 years, dude, like that would be pretty freaking good. Like that's a killer returns, like 100% in like 2 years. If that's the case, I don't know. I don't really know. I mean, I haven't looked at any numbers. I'm not a fundamental guy, but like outside looking in, I'm like, I don't really know what they see in Roku unless I'm missing something substantially, which I probably am. I mean, I don't know. That's what I always say about it. I'm like, I don't know. Zoom, I honestly can see the case for Zoom more than Roku. And Zoom is even a weaker name. I mean, look at this. Like that looks like an attractive risk reward, you know what I mean, type of stock. Down at $70 when the lows are at 60. It's like, oh, okay. Also, have you guys seen Disney? Disney is an interesting one because Disney is like super weak. Like, look at this. We're looking at the weekly chart right now. Look at how weak this thing is. Just with everything being strong, it's so weak. It's still in a downtrend. Who knows? But it's like, is it going to be like that next nice downside play? Like, if the market rolls over, is it going to go whoosh? If we get a nice pullback in the market, is Disney going to go plummet to new lows? Or is Disney going to be like a slow kind of grinder back up and just kind of sneakily get back up, and have a nice return over the next year or so? I don't know. Hasn't done it this year, which is, I don't want to say it's interesting. I mean, it's interesting. I don't want to say it's surprising. It's just interesting. CVX below 153. Is CVX. Let's go back to the daily charts. Interesting look on some of these. You know what was funny? I was looking at Chevron. I was looking at it's nice support down around 150 area. I was looking at ExxonMobil today. Check this out. ExxonMobil looks weak as hell, relatively speaking. Here's the ExxonMobil chart, which just is now going to now close at a new low. Is that no, not a new low on the year? It actually came down in March, but the new low of the past couple of months on ExxonMobil, which is funny because maybe this is showing us that we're seeing a shift out of this thing because, they got earnings coming up in a couple of weeks. But this was so strong, like all of last year. It was like you couldn't mess with that. ExxonMobil. It was a beast, absolute beast. Like oil would kind of be like up, kind of down, not as strong, and ExxonMobil will be pushing highs. Like ExxonMobil hit a new all-time high in May, right? Where was oil at in May? Not that it necessarily matters. Oil in May was at like lows. Like oil was making lows. Like oil popped in mid-April and then it fell down to lows in May. So today was interesting because we had a lot of oil stocks do well yesterday, if I recall. But then today, crude oil is down 2.5%, 2%, which is not that insane. Let's just, look at the chart, right? Like it's had a big move the past couple of weeks, right? So, okay, it comes down a little bit. And then now you're sitting here like, okay, like this thing pulls back a little bit and ExxonMobil just breaks down massively. That's not a great look for the sector, right? Or for just Exxon in general. So I have this thing level at 101 and then I have the next level at 98. That's your target down now, and downside is 98 on Exxon. Below that, who knows? But that would be my target in the near term if I had to pick. And it's got some good volume too. Look at the volume. It's actually got some higher volume candles too on that validate the downside pressure. So that's interesting. Oh my God, Adobe. I forgot about Adobe. That's a beast. mRNA. Yeah, we were talking about this one too. This is like, healthcare has been interesting, but this stock in general is also very interesting to me because I think you are on the cusp. You can even extend this line to the left. You are on the cusp. Let me extend that. Of a freaking nice breakdown on this thing. Let me just put that right there. Alerts on your plan expire. Oh yeah, I downgraded to Pro Plus because I had Premium and I was like, I don't need all the features. But honestly, like I kind of was like, there's been like a couple little things and I'm like, oh, that would have been cool to keep, but not a big deal. The savings is decent from Pro Plus to Premium, so I was like, I don't need Premium, let's be honest. But whatever. So that's the level to watch on Exxon. Or not Exxon, on mRNA. Underneath that 116. Oh shit, Alexa's talking to me. Alexa thought I was talking to her. I'm not talking to you, Alexa. She probably hears me talking to myself all day. Underneath that, upper 80s, 80s. Someone say 80s. I think 80s is doable on mRNA. Who knows? It might take its sweet time to do it, but that's what it looks like to me. 80s on mRNA. So like if you were like looking at that, like it's not, because like you can play, I guess you could play like a put debit spread, or you could play I would just short the shares. It's like it's a big enough move that you would have in the cards on a swing trade that be 20%, something like that. Like short the shares instead of trying to play options. Yeah, you can make more, but like if your timing's a little bit off, give it time to work. I think. Who knows how long it will take to get there because we're looking at a weekly chart here. So if it breaks down below that 116, not a good look on mRNA at all. Solar as next jump. Let's see. ENPH. And fans, I know people love it as a company from a fundamental side. People like it. Looking at that weekly, this is looking like just a little dip by and, overall. So I would have, these are the two lines I'd have. I like this chart. If it can get above this 187, 188, 188, that's a nice, like this has got some gap fill room up into the 200s again. I like it. I like it a lot. And you got a relative, have this low here, higher low in June. So now I think dips, versus this 150 area look decent. Again, earnings could be, wild card there for sure. But it looks decent. I think, to be honest, I'm really excited to kind of like go see family for like a week in the end of July is when I'm going to be away. Let all the earnings kind of go through and play out. And then come back and have some clean slates and not have to worry about earnings on a lot of stocks as we get into August. I mean, there'll be some stocks reporting earnings in early August, but like, okay, now we got some clean slates. Because if you're going to look at like, if you wanted to swing trade or any of that stuff, I will not hold through anything through an earnings report. So then you can start, saying, okay, let's see this sector, or this or that or this, or whatever. But you'd have earnings out the way, ideally. MRA does look good if you get I mean, that's the thing. I wouldn't take the trade based off a hunch, but I mean, given what we've seen with the whole vaccine stuff, the vaccine stocks and how that has kind of that was just like, they exploded during 2021 when everyone was saying we're going to have 17 boosters and all that stuff. Now that no one gives a shit anymore, let's be honest. I mean, whatever. Most people don't care. No one's talking about it anymore. Who cares? It's a thing of the past. Do you think that Eric can come out of MR? I think it could be a nice, like, slow bleeder for, maybe more than just a couple of months. Maybe it's 6 months. Maybe it's a year. Like, you can have this kind of a slow bleeder to the downside that you can play. It's obviously risky to short stuff, but riskier than going long. That's for sure. But, if you have risk management in line, could be something to at least think about. I don't know. UNH a Dow component. Yeah, UNH ripped today. I saw that. Let's check out this chart. Well, I mean, the thing is, it wasn't doing like, I didn't realize I had lines here. It wasn't doing amazing. It honestly came down into a nice spot. Like right into here is where it found support back in 2022, 2021, or early 2022. And then, I mean, you'd want to see this thing make a nice little, break some of these higher lows is what I would want to see. 7% move is pretty big on UNH. Doesn't tend to move that much, right? So that's pretty cool. You get tired of the 20th shot. I mean, dude, I don't know. I don't know. I like take. I'm not like, I don't like to get into like the whole like sided arguments of like a political side. I'm more so like from a health perspective, if I'm just being completely honest, and I take it like pretty seriously right now. Like, I don't know, like, dude, like I just, there's a lot of things that you definitely do that are not healthy, but like, there's just, you have no idea like the effects of the long-term that's going to cause. It just hasn't been tested, right? No one knows. Like, you just legitimately don't know. I'm not saying I'm not open to doing it, getting it, but like, it's like, I don't know. So the people who are just, get super crazy about it, it's like, okay, if you want to get it. But I don't know. It's like, not everyone really. And then again, like your own immune system, the whole deal, either way, right? I think that's a short. Obviously, for me to play that, like it would need to break. I like the breaks. Give it to me below 116. Then the entry, I have an alert on it. Maybe if I'm interested, I will take it. I want to try, as I was saying, I'm going to be testing out a swing trade strategy on stocks, like on options, where the intention is, well over 100%. Best case scenario upside. So, and then the downside obviously is it goes to zero, right? Worst case scenario, but obviously you try to sell it before. And so like I'm targeting, like I hope to get like able to do a 40% win rate. And then if I can do that, I think we got a pretty solid strat coming up, but we'll see. I'm going to test it out over the coming months. And that's like one thing that's on the back burner that I'm looking at. And this could be one that fits the cards. The only problem I'd have is like markets is going higher. You're playing a short while the market's going higher. If the market pulls back for a couple of days, weeks, or maybe the market pulls back for a while, it's going to be good probably. But you have the market momentum kind of going against it. So you're fighting that. Although this stock has done its kind of own thing anyway, so it's kind of doing its own thing. It's got its own momentum anyway. So I don't know how much that matters. You got to weigh it. You got to weigh it. But I think that's where the data comes in. because I'll track it all, and it won't be that many trades. It'll be, a swing here and there, like every maybe like a couple of month max. And so I'll be able to track it pretty detailed and know exactly like, okay, here's what happened. This didn't work. You can't say it didn't work because again, there's a million reasons why it didn't work. It could, a million reasons why it may not have worked. But it's like, okay, here's what happened. I went for a short because this stock presented a short setup. For example, let's say a short at mRNA, if it broke 116 and I was targeting like the upper 80s, something like that, fill in some of this volume profile, right? And the short ends up kind of going like this and then snapping back and faking me out and then stopping me out where my stop loss will be. Probably going to be a stop loss over some of these lower highs. So like 130 area, 128 looks like probably a decent stop loss. I don't know on that swing. Stops out. Okay, just logging. The S&P has been trending higher for the past couple months and it continues to do so. Great. Like that's logged, that's noted. And if you go through and realize that all of your winners or most of your winners are coming when you're in line with the overall market direction, well, then that tells you, okay, that's important to the strategy. We should note that before taking trades and not take trades that would go against that overall market strategy, right? Just knowing the numbers. So that's the game plan on that, just to get that data. That's just how my mind will work on that stuff. Check this out. I had this trade on Tesla today. So I say it was a red day for me. Yesterday was a red day. Today was red. Actually, it's the first red week I've had since May on day trades, which I looked back and I'm like, that's actually pretty impressive, by the way, which I was pretty happy about that. So it was Tesla. I got a bunch of lines. These are the highs. Let me get rid of some of these lines. So it was Tesla over yesterday's high, which I liked because we came up in this morning and we had established an area or a wick up around yesterday's high. I drew this line in, and then like 20 minutes into the market open, we broke above. This candle broke above. So I got in. And I played calls. I think it was 280 strike or 285. Actually, no, it was out to next week. So it was like 300 plus strike because the contracts were super expensive because it's got earnings. And then it went a little bit and then immediately, or not immediately, just kind of false broke back to the downside. Now, why was that a good idea in my head? If I go to the 1 hour chart, like why I like that was you had this high right here. You zoom this out, right? You're trending up. You had a push up, consolidation, break. Okay, great, play the break. It didn't work. Okay, fine. I also had Meta. Sorry. Meta, very similar scenario. Go to the 5 minute. Give it a second to load up. Oh, sorry, I didn't have it typed in right. Meta, of course, now she's going to be slow. Why is she being slow? Cool. Yeah. I mean, it was the same thing. I actually played this right here, this high. I played the break of that, which occurred on this candle. We ended up getting a new high of the day, and then it immediately dumped. So 2 false breakouts today. Okay, done. I'm done. It's not working. It's fine. I don't really have to, the month is still green, but and I like that trade too. I'm like, hey, it's getting up towards these highs. If it breaks out here, maybe we're going to get a new high on Meta, right? It's up around 314. 316 isn't that far away. That could be a new high. Could be awesome. Could be an amazing trade. Up 320 would be awesome, right? It was valid and just didn't work. Got that false break, fake out. That's what I've been noticing has been happening. A lot of stuff intraday. I've been putting myself in positions that have these false breaks. And I look back, I'm like, I honestly can't be mad. That there was like 2 mistakes this week that I can be mad about that I just will correct going forward. And always, all it was I didn't notice or I didn't play to the bigger picture timeframes and relative strength. So I kind of was like, well, everything's going up generally speaking. So I like this chart better than this chart, even though this chart is stronger on the bigger time frames and has a better look on the bigger time frames. I like this one because the smaller time frame 5 minute setup looks better. And so I did that, and then I got faked out a couple of times this week. Whereas if I had played the chart with a better bigger frame time, like the better 1 hour chart, better daily chart look, it would have worked. And so that was the 2 things. I guess I could have had a green week if I did that, but it was a small red week. I'm not going to complain that much. It is what it is. not going to nail the pattern every day. And the thing is, it's not going to work too, right? Yeah, it won't work 100% of the time. And then the past, and I have done that. I think it was a couple weeks ago. That last week of June was where I had a day where I don't want to say I blew up, but I got pissed that it wasn't working, and I was like, fuck, and I kept trying. I'm like, well, eventually one's gonna work, and none of them did. It was a literal just choppy day, like it didn't work at all. But I kept going, and then I lost like 2 weeks worth of profits or something, or like a week worth of profits in like one day. And I'm like, geez, I somehow actually had a green week. I was like checking back. I'm like, there's no way that was a green week. It actually was a green week because there was only one red day that day. All the other ones were like moderate size green that all ended up beating it out at the end of the week. Barely, but it was. But yeah, like I didn't do that. And in this case, I was like, that happened yesterday, happened again today. Actually, yesterday, there were some mistakes. I basically playing the strategy properly. I should have just traded QQQ versus SPY. That trade would have worked versus SPY stopped me out. And then it was Google. If I had not been a pussy and had, not stopped myself out on just a pullback back into prior resistance and let the trade work a bit more because the bigger time frame looked good. The 5 minute, I got a little, trigger happy and was like, I want to make sure I don't lose. I ended up having a small win when it could have been a much, much larger win. If you look at Google's chart from yesterday, it was a monster. Look at this freaking beast. The thing was a beast, absolute beast. And I ended up playing this break, and I ended up stopping myself out, I believe, actually, because the contracts were moving pretty well. I forget exactly what it may have been this candle. So we popped up, went green. I had taken partial profits. I think it hit 10% right here, believe it or not. And then I stopped out here. When looking back, it's a tough one. It was kind of like, did I need to kind of have that? It was a wick. Did I need to stop out here? I don't know. I probably could have given it a little bit more, but I didn't. And then we had this massive move. So looking back, I can't get that mad at it. It's not terrible. Like I understand why I had my trailing stop loss and why I got hit and how, whatever. But yesterday, bigger picture time frame, what happened? What was Google doing yesterday? Well, Google was breaking out of a downtrend and had, wasn't like it was at all-time highs or at new highs. Like, it broke out of the downtrend, still got some range to go until you get to the top of the recent trend. Those tend to have legs. And so there's no reason to, pussy out sometimes when you're in the middle of what could be a big move. So that was not the two things, yesterday, but whatever. But yeah, I mean, the thing is, I think like a day like today, 2 L's like that. Okay. It's not working. Just leave it alone. And good I did because, if I kept going, I probably would have lost more because the market ended up just trending back and kind of back retesting and just, not really doing a ton ever since like after the first, hour of the day. So more confident in the Renko strat. That's good. That's good to hear. Yeah, I would like to know. I would like to like see that strategy kind of drawn out a bit better too. I want to. I would like to. Like, that's what I'm hopeful to do for the swing trade strategy is to like have a detail. Like once I have some data to play it to make it make sense based off the numbers. If it does, I'm hopeful that it does make sense. 2 minutes. I didn't realize the market's gonna close in 2 minutes. My brother's getting deep into options trading now. It's funny. Him and my dad texting about like NVIDIA puts, this and that. Like he's getting into it. They follow they pay for like an alert service, I think. And I don't really know the details and how much they follow, but like those, I think they have a good track record. So I'm like, if you guys are not going to like do your own thing, don't try to mix your own thing with this thing. Like just follow exactly what they do. And just, you'll be able to say, is it profitable at the end of the month or not? And if it's not, after a few months, you can just stop paying for them. But I never really got into that. I never really liked following someone's alerts, but that's what they do because they also, my dad works a full-time job, doesn't do this for his living. but like he like is interested, so he kind of does that on the side and likes to talk about it, and has an investing portfolio and all that stuff. My brother's just getting into it. He's 20 years old now, so it's funny. Yeah, I didn't realize this. This is interesting. This is interesting. I'm curious, where did this come from? Like, where did this all come from? That pulled, is it housing? Not really. Transportation. Utilities is down. Healthcare. Daily household items is down. Communications, whatever that means. Phone services, phone stuff, cell, mobile. Okay, cool. Education. Just looking at different areas. Recreational. Okay, cool. These are cool just to kind of see what areas came down as of late. Like this past, past week, what's down a lot on Trueflation to just kind of see, why the number came down so much. Utilities came down a lot. Healthcare, yeah. Okay, cool. A lot of different, all categories came down, looks like, this past week. Yeah. Or, I guess, past couple of days going into today, whenever the new data updates for them or whatever. So that's interesting. But, man, we're going to see this Trueflation go sub 2 here soon, I think. I from what I've seen, the expectations is for a bounce back, I think, Cleveland Fed CPI. Let's see what the Cleveland Fed says. Inflation nowcasting. My ass. We'll see. Do they have this out though? Is this updated? Oh, this is apparently updated. So here's what they have for. Do they have comparisons here? Inflation nowcasting quarter 3, CPI June. Well, we want CPI for July. I guess their projections for July. Do they not have that? July 2023 here. Okay. Year over year. They're saying they think that they're going to get a CPI at 3.35. So that would be an up, right? That would be up. So we got a 3. So this is what is interesting. I'm curious to see if this numbers end up holding up. They think that we're going to see a bump up in CPI and a bump up in core by a little bit because core came in at 4.8. They think we're going to see a bump up in both of those in July for July's data that we're going to get next month. So still a month away, but that's what they think is going to happen, which is interesting. I don't know. We'll see, but that's what I was seeing. Like we're going to get a bump up for maybe the next month or two and then resume back to the downside a little bit. And this is why I think that these targets by end of year are like in that 3-ish range from what I recall. Maybe get a bump back up into the mid 3s and then it comes back. And that's why we kind of sit around 3 for the rest of the year. I don't know, but it's going to be interesting to watch, to say the least. I was thinking when it comes to, this is what I get into now. Like to play the options, like the game, right? I go back and forth because I really think the idea of just trading shares, I think I would probably be better with. And maybe for like a day trade perspective on like large caps, I think that's probably better to minimize the decay. The only thing that I go or I jump on the other side and say, when you play options, you could play for example, let's just look at Coinbase, at the past couple of days. Maybe this is not the best example, but I don't know. Coinbase, right? Had like an inside bar day, if you will, right? Where it had this big push. Then it had this day where it was inside that entire candle. Then it broke out over that candle. Okay, upside had a massive move, right? Okay, cool. So you could have played like the Coinbase 110 calls or the 100 calls, on this day when it broke in like 93, even for like next week. And they could have gone a couple 100%, right? So if you think about that, right, you have to build a strategy that only comes after or goes after big moves. You can't come fuck around at like for two little moves, right? You need big moves. So it needs to have, decent moves. So maybe you look at like the ADR, the average daily range of a stock. The higher the ADR, like kind of the better would be good, I guess. And then you look for those out of the money calls. And then you have to play the game of like, okay, well, how far out the money do I go, right? And maybe there's a calculation that you can build on your own based off of the ADR, the average daily range. And then, okay, if the ADR is X, I then play 10% out the money calls. If the whatever. If the ADR is this, I play 2% out the money calls. I play 5%, whatever the number is, right? And then set yourself up to be in a position where like you maybe take a trade and you can risk a very low amount of money. It doesn't have to be to test this or even to do this. Say you risk $100. You throw $100. Maybe the contracts are 25 cents. You buy 4 contracts, right? The trade or the contracts go to 50, they go to 75 cents. Maybe there's some sort of systematic approach where when you get 100% or when you get 200%, you take off your initial cost basis, whatever the number is. You take it off. So now you take 100 out, you leave what's left, and then every 100% you scale a fraction of, or you scale half. Let's say, ideally, if you had more contracts, great. Or you can scale one at a time. So let's say it goes 300%. Okay, take one off. 400%, take one off. 500, take one off. Maybe there's some sort of like systematic approach. You go at it from like that perspective, or maybe every 200, 400, 600%. Because when you get those moves, like the risk reward is insane. You just have to have some sense of like, what do I target? And then have a reasoning as to why. And then know your numbers as to, okay, well, it's fine if I lose on 60% of these trades, because I win freaking massive when I win. So I can turn 100 into 600 or 100 into a couple hundred, right, on winners. And maybe I can, on losers, I go 100 back to 25. So I salvage 25 every time I lose on average, And so that ends up netting you nice gains over the long term. But that's like where my head goes, because like it makes a lot of sense, because your upside can literally be, if you get a crazy move, like on Coinbase, some people had this week on Coinbase, they had crazy thousands of % gains on some of these contracts. So like that could destroy a couple small losses in a row. Like that could just blow, you have a couple losses, okay, whatever, it didn't work. A trade like that could blow those out of the water and some, right? And there's like there's unlimited upside. On the put side, there's somewhat of a limit to that. So you can get big moves, but not maybe as big. So like that's why when the market's hot like this, it's kind of cool. But you gotta be systematic. You gotta have a strategy. You can't just randomly do this shit, because again, if you're randomly doing it, you might do well for a while, then you fall into hard times, and then you don't have data-backed decisions to be made, and you don't have data to back you up and go, okay, do this, do this, do this. You're kind of just like, well, maybe I'm going to change my strategy, and then you're changing things, and now you're not able to kind of look at the numbers and say, okay, well, why? No, you don't. You're comparing apples to oranges now, right? It's like that's what I've done a lot in the past, and I think a lot of people do that, and they end up losing a lot of money doing that way. And then they end up falling off and then never seeing them again. Like that's just what happens. Like that's the reality. But that's my 2 cents. And also the other piece is like, well, how far out in terms of expiration do you go, right? So it's like a whole, that's why I like breakouts, because you don't have to worry about the timing as much. Like it's probably going to happen now or it's not going to happen. And if it doesn't happen, we exit, we take a loss, right? Guys trades just equity, cool, simple strategy, just management. Okay, cool. Yeah, that'd be good. That'd be awesome. Yeah, I mean, I think that when you think about it too, like from just an equity standpoint, like you can totally do that too. And I kind of dabble with Meta this past week, 2 weeks or whatever. Dabble with Meta a little bit on the swing trade and just shares, and it worked. Didn't make much, made 5-6%, whatever the number was. Okay. But again, who really care? I don't really care about the percent, right, that much, like, or whatever. It's more about like get the reps, right? Have good risk. I was only risking like 3%, whatever the number was. So get the reps in, risk reward, repeat. So with that said, I'm gonna wrap things up for today. We'll be back hopefully for a live on Sunday. If I can't do it on Sunday, I'm sorry. But next week we'll have a bunch of lives throughout the week. And then I'll be off early Saturday morning. So I got another week of hanging around. But yeah, we'll have a lot of lives next week. We'll hang out and all that stuff. So see if the momentum continues. It looks promising. Again, it's just, we'll see how next week goes. It'll be very telling if we keep seeing continuation. Tesla and NVIDIA earnings next week, those should be big. So we'll have some streams. I think for Tesla earnings at a minimum is on Wednesday. We'll be on stream for that probably. So that'll be fun to watch. Thanks so much for hanging out. I will see you guys in the next one. Have a great weekend. Get outside, do something fun. Peace.